Welcome back, my boys. We about to get into this daily range case study, daily review, whatever you want to call it. And we're going to be doing it on NAS100. So if I'm being honest, today I didn't trade, so this is just going to be me overall just kind of giving a breakdown of everything that happened throughout the day. Today is Friday, the 20th of October. I'm doing this at 11 p.m. And from the looks of it, it was just a bearish ass week, to say the least. Like, it doesn't take a genius to be able to tell you that this shit is just going lower and lower. And for the most part, DXY, the dollar probably has been going up. For the most part, it's been consolidating, but you could see there was definitely more bullish moves on this pair compared to the indexes. So with that being said, we're just going to start off by marking up everything that we would usually do. So since this is Friday, on our markup, we would ideally want to mark up the previous day's highs and previous day's lows of the previous day, which would be Thursday. So like I said, it was very simply a bearish day. You can see the previous day's high got nowhere, price never came nowhere near it. And what does that tell you? In simplest terms, all of that is telling you is that today was bearish. Simple as that. From my closest to my eyes, something that I would have been looking for a price to take a trade off of would have been this fair value gap at this area right up here around this 14,850 area. That would have been something that I would have definitely been looking for possible shorts. For example, this move right over here around 4 a.m. If this at least would have ran into that high and then started shorting, that would have been something that, in my opinion, I probably would have taken. But based off of how price looks at this moment, and based off the time frames that I like to trade, there really wasn't much when it comes down to what I should have taken, if that makes sense. I wouldn't have had anything that really fits my rules. And the only trade that would have fit my rules, in my opinion, didn't take place until 2 a.m. and then 1 p.m. So with that being said, on to the next. What do we like to mark up next? I always like to mark up my Asian session range, so from 18 o'clock all the way to midnight. And honestly, of recent, I haven't really been marking up the Asian session range as I should, which is something that I definitely want to get back into doing 100% because there's reasoning behind why I do it. So that's that. But the one thing that I do see that price did, let me make sure this high is intact with that right area. So overall, when I was just doing a little brief overlook of price before I started this recording, I was trying to find where these price wicks went into, because there's a reason behind everything. I try to check higher time frame for value gaps, and in this case, the only thing that I could find was on the 4-hour. The 4-hour left a imbalance from this high and this low right in there. So one thing I'm going to do is I'm going to mark up the 50% of that range, just because I think that's where price came into. It didn't even come there, matter of fact. So this 50% of this 4-hour for value gap didn't even get traded into. So it's very hard for me to really come up with a reasoning for why price would have just wanted to short here. The next thing we're going to do is we're going to pull a fib from that previous day's high. And at this point, I'm not going to draw it to this previous day's low, just because price ended up coming lower before it went higher. So this is the highest it retraced. So what would I do with that? I'm going to take my fib. I'm going to get the continuation level. It didn't even tap the continuation level. As of right now, this is a very easy no trade day for me. Based off of what I'm looking at, hindsight, I'm glad I didn't take any trades, because there was little to any reason to see price have the reaction it did at this moment. The only thing that I could see is the fact that price ran above this Asian session high. And after price ran above this Asian session high, grabbed all the liquidity at I'm pretty sure this was, didn't mean to do that. Pretty sure this first took place at 4 a.m., which is the high of the day. So we're going to actually annotate that. Not that it was in any crazy spot, but just understanding what times and are the highs and lows of the day likely to be created. So 4 a.m. has the high of the day after Asian session high got ran. So what does that mean after the Asian session high got ran? In simplest terms, the Asian session liquidity high was grabbed. So everybody that had stop losses above The Asian session high got stopped out. Anybody looking for breakouts maybe got a little bit of profit, but eventually ended up coming lower. And for the most part, from 2 a.m. all the way to until 10 a.m., price was stagnant for the most part. Yes, it was moving up and higher and lower, but it didn't really have a major move until 10 a.m., which right here you can see is the ideal move that would have been the ideal play to be able to capture, if that makes sense. So one thing I'm also going to be doing is, since I didn't find any reason for why I would enter at these highs, I'm going to simply look for a reason for why I would have entered at 10 o'clock or around that time. So first thing that I'm doing is I'm going to be drawing a fib from the high point, which is ideally going to be the high of the day from London. You could use this high from 9 a.m., but in my opinion, I'm going to just use the London high because that's the highest point, and to this lowest point of this small range. So yes, this isn't the low of the day right down here, but this is the lowest point of this range right here. So this whole range, that's the highest and this is the lowest. So that's where I pulled my fib from right here. And as you can see, price came significantly high into this fib zone, and this is what ended up being a good area to see price come lower. Now, if I go down to maybe a 30-minute time frame, I could slowly find a whole bunch of things that were happening within this, but I just like to keep it simple. I'm going to stick to the hour, and I'm going to look at the things that are very clear to me. So besides this fib at 10 a.m., I personally don't see any reason for why I would have taken a short here, especially because 9 a.m. failed to run London high. If this fib was not there, and say, for example, price came and ran this high at 9 o'clock, 9:30, and then had a move like this, that would have been my ideal move. But based off of what it did, it came very close, but didn't do it. So anybody looking for a breakout didn't get it. Anybody looking for a false breakout also didn't get it. So it's just one of them days, and it's also a Friday. So what ended up happening, price ended up just dropping lower, and based off the higher time frame, like the daily, there really isn't any fair value gaps or anything within this area. So it just looks like price is more than likely just going to keep on running for these lows. If we come to the weekly, there's also only wicks, so it looks like it's more than likely just going to keep dropping to these lows. It's just, honestly, there really isn't anything crazy to explain today, honestly, because there isn't any trades in here that I would have taken. And even the trades that I would have taken are not within the time frame, because one thing I do see price did is right over here, it didn't even fill it, which is crazy. But price came up at, what time is this? 1 o'clock, and it filled in this fair value gap that it was left at 9 a.m. But even then, price failed to fill it. It got very close, so I wouldn't even have that as something I would have taken, because even then, it wouldn't have really fit the criteria 100%. But honestly, that's really all I'm going to be able to give you for this day, just because there really wasn't anything that I would have even tried to capitalize off of. I don't want to just show you some random stuff that I wouldn't even taken, because it's easy to say, oh, I would have went short here, but it's in reality, knowing I wouldn't have went short there, I'm not going to sit here and try to lie to y'all. So what I'm just doing right here is I'm kind of just making this candle right here, because this is what these candles look like. If you guys understand the open, high, low, close, you understand what this candle is right here. And if you don't know what the open, high, low, and close is, then you got to do more research. I suggest going into ICT and just doing your stuff. But basically what it is if you were to look at charts and bar graphs, the open, high, low, and close is essentially the only stuff that we have to be able to understand what price is doing, where it's going, and where it's likely to be moving to and from. So we have the low of the day, which closed at 13 is 1, so 4 o'clock the market closed. So we have the low of the day right down here. And where do we get the low of the day at? Right after price ran below this New York low. So that 10 o'clock low ended up getting ran through at this time. So we're just going to annotate that. So the low of the day at, what did I say, 4 p.m. after New York low got ran. So this was a clean sell day. Now, in my opinion, the best way that we would have been able to capitalize off this, because I didn't take a trade, the best way that I would have been able to capitalize off this is if I was already holding trades from the beginning of the week. So anything from Thursday, Wednesday, Tuesday, those would have been good moves. Monday, you could have caught a short, but for the most part, Monday was bullish. But the rest of the days, if you would have been holding any runners, those would have been the days that price did some damage, especially if you would have held it, because more than likely, based off, like I said, the higher time frame, the weekly and the daily, we're more than likely going to be reaching lower. Now, that doesn't mean we're just going to be straight dropping lower. Let me just full face cam because I think that's mostly it for this. It doesn't mean we're just going to straight drop to the floor, just die. It could, but based off of probabilities, based off of what's likely to happen, I just think we're more than likely going to stay bearish. Now, that can mean a couple of things. That can mean early on in the week, we may get something like this. Maybe price runs above this old high or low to then keep going short the rest of the week. Maybe we push a little bit higher to this gap that I was talking about earlier to then drop lower. But overall, I do think we're going to keep going lower. But if market opens, because it's Friday, so market just closed. But if market opens on Sunday and just keeps dying, personally, I'm not going to look to take advantage of anything until it's my time frame, which is Monday, New York session. But ideally, if market could open, give us some room to that top side so that I can kind of position myself to be able to keep capitalizing off these sells, because I do think we're going to keep getting it, especially the way this weekly candle close is very bearish, very, very bearish. So if we can potentially get movement back to this weekly fair value gap, I'm going to make it just blue so you can easily see where it is based off a lower time frame. And look at that. Can't make this up. That weekly fair value gap is in alignment with this 1 hour fair value gap that I was talking about previously, and it's also above this high. So like I said, this area up here may have not got the trade this week, but it may happen next week for a good capitalize off of that short-term move. But price is price, and it's going to be the same regardless. So it's just a matter of having a plan, having good risk management, and sticking to it. But with that being said, I appreciate everyone for watching. If you're still watching, then you obviously want to learn. So with that being said, if you're not in the Telegram, make sure you join the Telegram group, free community, active every single day. If it's not me, there's 400, and there's probably at least 10 to 15 people that are in it every single morning. Every single morning. Yes, we have 400 people aren't active every single day. There's about 10 to 15 people that are active every single day. Like is religion every day. And it's free, so there's a lot to learn from it. Also, you can check out the previous YouTube videos if you want those, but I think the Zooms and the live streams, it's definitely going to be where majority of people learn, because you can actually talk to us, and that's the main thing. But with that being said, I'm just going to stop talking. Everyone enjoy their weekend, stay productive, stay safe, and make sure you fear being average.